All right, folks, my first guest says the action is on par, actually, for a secular bull market. I want to bring now Federated Hermes CIO, Stephen Auth. All right, Stephen, so let's discuss this because you've been a fan of the secular bull market going back to March of 2009, born out of the great financial crisis, short-term corrections are to be expected. And the key thing is the technological revolution.
Right, and we've had two or three, you could argue. Certainly the cloud was one, and then AI and maybe space is next. So it's coming fast and furious, one on top of the other here.
And these short-term corrections, have we gotten spoiled because they feel like they're further apart? Certainly these bear markets are further apart and shorter lived.
Yeah, the corrections really fuel a bull, Charles. You got to wash out the weak hands, the short-term players. You can get corrections of 20, 25% in a secular bull market. The trick is that stocks always make, if you're in a secular bull, which we think we are, make a new high within 18 months. So,
within 18 months?
Yeah.
All right, so let's talk about this. So the technology, I had a bar chart of this. This kind of breaks it down more granularly. 7 years straight, almost 20% greater returns. This is since 2022, we did have one bear market here. There are similarities to the dot-com era and to this era, but what would you tell folks are the primary differences?
Well, I mean, I'd start with your chart on earnings, right? The tech stocks are up 1,000%, 10-bagger in the 90s on no earnings.
Right.
We're up 500% on 700% earnings growth this time around. So this has been an earnings-funded expansion. And in fact, as you pointed out earlier, Charles, multiples have gone down, not up, in the last 18 months.
Right, stocks ironically have gotten cheaper. So yeah, let's talk about some lessons from your book. You got a new book coming up soon, Humility at the Highs. I love when you always talk about that. And there's a few things that the correlations between what you do and some of the things that you do, your passions, and what you see with the stock market. Let's talk about these.
Well, yeah, stocks eat nominal earnings. The nominal earnings, which is, the economists like to talk about real this, real that, but stocks eat nominal earnings, and nominal earnings are exploding to the upside. Part of that's inflation, but part of that is all these productivity gains we're seeing. And
so Stephen, someone says, okay, Micron had knocked the cover off the ball. Stock's down since then. NVIDIA's been knocking the cover off the ball, and the stock has been really shaky. Rarely does it get a bid, And then, of course, more recently, Samsung, one of the greatest quarters in the history of corporate world, not America, just any corporation ever, and the reaction has been to the downside.
And that's the second lesson, Charles. Focus on the forward market, not the spot market. Everyone got this with oil because it has an actual spot market and a forward market. Forward market never really took off during the Iran crisis, right? But in the same way with stocks, I would say there's a spot market for stocks, which is the day-to-day traders out in Korea.
That's more emotionally driven.
Emotionally driven, momentum driven, chart driven. And the long-term investors are looking at the long-term fundamentals here. So the spot markets for Samsung is falling apart right now.
Right.
We've got one of our stocks on a buy list here is a chip stock down 25%. Right. In the spot market. The forward market looks pretty attractive.
By the way, Ken Griffin over the weekend had some comments very similar to what you're talking about now. Even professionals, everyone's changing this sort of quarterly mindset, looking long-term, make more money, less headaches. But then there are times when you do nothing. This is my favorite line from Cool Hand Luke. Sometimes nothing is a real cool hand.
Right, we always want to do something. The news cycles every day. I got to get up, I got to do something, trade something, buy something, sell something. Sometimes just sit down. As long as the long-term thesis is intact, and I say that now because we're entering earnings season, there's going to be a lot of noise around trading earnings.
Right.
And as long as the thesis is intact, we're telling people stay with where you're positioned. Make adjustments if it's called for, but most cases doing nothing.
You like large cap growth, value, small caps, and emerging markets. Let's look at some of the picks here. We're going to bring these up here. You gave us a great tease on the 25% down. Is that Micron?
That's Micron.
Okay.
Right. Stock's down 25% in the spot market, if you will. The stock is almost cheaper than ever right now on a forward basis. We think it's turning from a cyclical growth stock to a growth compounder. It's worth a lot more than a single-digit multiple.
Amazon, a lot of folks, including myself, are saying, okay, it's the free cash flow and all these, everything's falling apart, but these are investments. And when they get the return on these investments, it's going to supersede anything they've ever seen before.
There's going to be a free cash flow super cycle with Amazon. Amazon's one of these stocks that's both a beneficiary from selling AI and also using AI within its business platform, especially on the retail side and the ad revenue, which is exploding to the upside right now.
PNC, why PNC of all the banks out there?
We like the banks. They're going to be in focus this week. This is one of those cheaper regional banks relative to the big money centers. It's got some growth drivers that other stocks don't have, particularly because its revenues are expanding. And so I think it's a good stock to own here. Also down in low middle digits, like 13 times multiple.
Good stuff, Stephen. Thank you very much.
Thank you.
See you again real soon.